Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the stock market snaps a 14-day gaining streak. The sensex down over 200 points, the Nifty lower by 80 points, tracking weak global cues. Nvidia suffers a record $279 billion rout in market value in a single day. The stock tanks 9%, triggers a sell-off in semiconductor and AI-related stocks. Reports say the company has received a summons from the U.S. Justice Department to appear in connection with an antitrust probe. The GST Council may reduce the tax rate for some cancer drugs from 12 to 5%. When it meets on the 9th of September, the decision could make cancer drug manufactured by Abbott, Zydus, Cadila, Biocon, Cipla and Reliance Life Sciences, among others, cheaper. The government debates changes to the FDI policy, which bars investments from China through the automatic route. Sources say key ministries are divided on Chinese investments. That's an exclusive. 54% of IPO shares allotted were sold within the first week, excluding anchor investors. As per SEBI, banks sold 80% of such shares, reveals a study conducted on 144 IPOs from 2021 to 2023. 40% of retail investors in IPOs were from Gujarat. The Heavy Industries Minister H.D. Kumaraswamy bats for increasing tariffs on Chinese steel imports from 7.5% to 12%, promises to address challenges faced by India's steel industry. BJP MP and Jindal Steel Chairman Naveen Jindal says even a 10 to 12% import duty may not be enough to stop Chinese imports. The government intends to discuss the rise in gold and silver imports from the United Arab Emirates. Sources say imports could increase even further, but a review of the trade deal with the UAE is not on the cards. 25% of the graduates from IIT Bombay did not secure campus placements this year. Average salary rises by nearly 8% to more than 23 lakh rupees per annum, but the lowest salary declines to just 4 lakh rupees per annum. 21 medals and counting. The Indian athletes deliver their best ever performance at the Paris Paralympics. Sachin Khilari is the latest to win a silver medal in shot put. Well, let's start with the market action, where a 14-day winning streak came undone today. The sensex lost over 200 points. The Nifty was down more than 80 points, tracking weak global cues. So if you take a look at the mid-caps and banks, also subdued in trade today. But the global markets, and that was the big story. Wall Street has seen a sharp sell-off, and chip maker Nvidia suffered the worst single-day rout on record. In fact, Nvidia's shares lost $279 billion in market cap after reports of an antitrust probe in the U.S. Rima is standing by now to take us through the details of what went on with Nvidia's shares. Rima.
So as you rightly pointed out, Nvidia's sell-off dominated headlines. A couple of reasons. One, the entire Wall Street sell-off on fears of a growth slowdown. The fact that Nvidia's stock price has seen a dizzying rally even after the correction yesterday. The stock is up 120% year to date. But the biggest trigger for the downfall was reports that the company has received a subpoena from the Department of Justice as a part of the antitrust investigation. Now, big tech coming under the regulatory scanner is not new. We've seen many companies, whether it's Apple, Google, Amazon, even Meta, get hit by complaints from the DOJ or even the FTC. So this has been a part of the trend where the big tech has been allegedly infringing on anti-competitive practices. For Nvidia in particular, the company has been a big beneficiary of the AI boom. Just look at the way the numbers for Nvidia have panned out. The revenues have been doubling quarter after quarter. In FY24, the revenues went up 125%, in Q1 to 62%, in Q2, the most recent numbers, the revenues went up 122%, and the stock was punished. The street wasn't happy. It just wasn't good enough. And all the big tech giants, whether it's Microsoft, Google, Meta, Tesla, Amazon, they all depend on Nvidia's chips to train their AI models. Now, just staying with Nvidia, reports suggest that the antitrust officials are concerned that the company is making it harder to switch to other suppliers. It's penalizing buyers that don't exclusively use its artificial intelligence chips. Now, Nvidia, on its part, has responded to the fact that it's not abusing its dominant position. They're saying Nvidia wins on merit, as reflected in our benchmark results, and value to customers who can choose whatever solution is best for them.
All right, Rima, many thanks for joining us. On to crude oil prices declining more than 6% this week. Markets are worried about high-frequency data from China, which points to weaker demand. OPEC plus nations are also considering a hike in output. Libya, a major oil producer, is set to restore production production from a key oil field and resume exports. S&P now expects oil prices to trade around $75 per barrel this year. Now, India's services sector activity climbing to a 5-month high for the month of August. The higher growth was largely led by resilient demand in the services sector and easing inflationary pressures. The HSBC Servicing Purchasing Managers Index, compiled by S&P, rose to 60.9 in August versus 60.3 in July. Any reading above 50 on the index denotes expansion and below 50 denotes contraction. On to a CNBC TV18 exclusive. The upcoming GST Council meeting on the 9th of September is likely to consider a whole host of things, including a reduction in GST on cancer drugs as well. And also metal scrap goods could be provided some relief. Timsy standing by with the details. Timsy, take us through what's on the agenda and what's likely.
Well, all eyes are now on 54th GST Council, which is slated to meet in New Delhi, and up on the agenda are a slew of proposals, some of which include for metal sector and health and pharma sector. To begin with, sources shared that the council is likely to deliberate on measures which could provide some relief on metal scrap. Sources said that since the metal industry had been pitching for reduction in GST on scrap from 18% forward charge basis, finally, after detailed discussions and based on the suggestions of an independent panel, the Fitment Committee is likely to propose levying a 2% TDS on supply of metal scrap on trade between registered entities to plug revenue leakage. Also, the council could consider introducing reverse charge mechanism when the supply is between unregistered entities. And in case supplier is not liable to pay GST, then it is likely to suggest that the GST liability should be borne by the recipient. Remember, the industry has been demanding reverse charge mechanism, and this demand seems to be getting cleared in the upcoming council meeting. Apart from this, the council is likely to again announce a GST rate cut from 12% to 5% on a slew of cancer drugs, and some of these drugs are being manufactured by players such as Alchem Laboratories, Mylan, Cipla, Abbott, Zydus, etc. So let's see how these proposals move forward when the council meets on 9th of September.
Timsy, many thanks for joining us. And of course, as always, stay tuned to CNBC TV18. We'll bring you the latest on the GST Council. More than half of the IPO shares allotted between April 2021 and December of 2023, excluding anchor investors, were sold within a week of listing. This according to a study by the market regulator SEBI covering 144 IPOs during that period. The study also highlights that banks sold 80% of the IPO shares within a week as well. Hormuz is standing by with some of the other key highlights. Hormuz.
You know, it's a very interesting study that SEBI has put out a couple of days ago, and the first biggest takeaway from that study is the fact that 54% of the IPO shares that are allotted to investors by value get sold within the first week of the stock listing itself. So that is almost half the shares allotted by value of an IPO that gets sold within the first week of listing. Now, it's almost, you know, that we are currently in an IPO frenzy of sorts, and it's an impatient frenzy of sorts. Because if you break it down, the individual investors sell half the shares allotted by value to them within the first week. When it comes to the HNIs, that number goes up to 53%. For retail investors, that number is around 42%. Now, when it comes to mutual funds, they hold on to those shares a little longer. So only 3.3% of those shares get sold within the first week of listing. But that number goes exponentially higher when it comes to banks, because that number is almost 80% of those shares get sold within the first week. Now, this is the interesting bit. Now, this is about individual investors. Now, 67.6% of those shares by value are sold by individual investors if their gains on the IPO price is more than 20%. Within the first week of listing. But it's not as if there are negative returns on the IPO, the selling stops. No, the number just comes down. That number comes down to around 23.3%, but still the shares are sold even if there are negative returns on an IPO within the first week of listing. Now, when it comes to geographic distribution, which are the places where the maximum number of retail shareholders, Gujarat ranks first. There are almost 4 out of every 10 retail shareholders from Gujarat. Maharashtra ranks second, followed by Rajasthan and Uttar Pradesh. So very interesting study put out by SEBI. The bigger takeaway, almost half the shares allotted by value get sold within the first week of listing.
Hormuz, many thanks for joining us. And staying with SEBI, employees at SEBI have written to the Finance Ministry raising concerns over and I quote, toxic work culture. According to a report by Economic Times, the letter dated the 6th of August stated that shouting, scolding and public humiliation had become a norm during meetings at SEBI. CNBC TV18 has independently verified that the government has received the letter from SEBI employees. Sources also said that it is up to the market regulator to sort out HR issues within the institution, and the government is unlikely to intervene. Heavy Industries Minister H.D. Kumaraswamy has said that he will try to convince the Finance Ministry to raise the tariff on Chinese steel imports from 7.5% to 12%. The minister said that the manner in which China was dumping steel into India has hurt the growth of Indian players. However, BJP MP and Jindal Steel Chairman Naveen Jindal says that even an import duty of 10 to 12% may not be enough to stop Chinese imports. Take a look.
One side, rates are coming down. They are suffering, our Indian steel manufacturers. Another side, China's dumping huge quantity. They are facing the problem.
How much duty have you sought?
No, I am not sorting. I am not requesting. Industry, they are requesting. Now it is 7.5% tax is there. That actually they requesting Finance Ministry to raise it to 10 to 12%.
The minister spoke about raising it for 7.5 to anywhere between 10 to 12. Will that be okay for the steel industry?
That would not be enough, because these prices, see, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they're losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They're not realistic prices. Those are just prices for dumping of their material to protect their domestic industry.
Well, from steel to gold and silver, India is planning to take up concerns on rising gold and silver imports with the UAE, but there won't be a review of the Comprehensive Economic Partnership Agreement, the CEPA. Now, gold and silver imports have surged 210% in FY24 from UAE, driven by import duty concessions granted by India to the UAE under the trade pact that came into force in May 2022. But sources involved with the India-UAE FTA say the problem may increase further with the reduction of duty, but not a pressing problem for now. Prime Minister Modi has concluded his bilateral visit to Brunei. The Prime Minister met the Sultan of Brunei and discussed ways to cement bilateral ties between the two nations. Both leaders have agreed on a mutual cooperation in agriculture, pharma and health sectors. This was the first meeting of an Indian Prime Minister to Brunei. Just a few hours ago, Prime Minister Modi landed in Singapore. He was welcomed by the Indian diaspora at the airport. During his visit, the Prime Minister will meet Singapore's Prime Minister Lawrence Wong to boost bilateral ties. As Prime Minister Narendra Modi lands in Singapore, real estate firm Capital Land Investment says it will more than double its India investment to around $15 billion by 2028. The company's funds under management in India stand at $5.66 billion as of now. Speaking to CNBC TV18, Capital Land Management says the company is seeing a demand for data storage in India, adding that it plans to expand its logistics portfolio too.
We are now about $7.5 billion of funds under management. We are looking to double that over the next 4 years, so that take us closer to the 15 billion FUM figure. This is going to be across asset classes, data centers being the new one, and also we still think IT parks have a long runway of growth, so that'll be the second part of it. And then of course logistics and industrial also is an exciting asset class.
Well, here's a CNBC TV18 exclusive. The government is debating changes to the foreign direct investment policy, which bars investments from China via the automatic route. The industry's called for some relaxation to Press Note 3, which was announced in 2020 to restrict investments from border nations, including China. Parikshit is standing by now with more details. Parikshit, what are your sources telling you?
Well, let's explain our viewers what had happened in 2020 with Press Note 3. In light of the border tensions with China, India had modified rules with regard to investments from countries which have a land border with India. This was to prevent opportunistic takeovers. And if there is an investment, for example, from a country like China and any entity there, then any FDI investment proposal or JV will have to get an approval from the government. There will be no automatic FDI or investment or JV in any sector. Having said that, over the last 2 years, we have seen joint ventures, especially with the likes of suppliers of Apple, for example, being allowed JVs with Chinese companies. So on a case-by-case basis, the government has been giving approvals to certain joint ventures with Chinese entities. The feedback that the government is getting from certain industrial houses is that you need to amend this Press Note 3 or this rule for Chinese investments so that we get better technology transfer, we get more FDI in the country. The CA recently in the economic survey had also said that we need to think about FDI from China, and it may help in India's growth as well. What the government is thinking is this. Well, there are divisions for that matter. There is one group within the government, a set of ministries, a set of departments who believe that we need to allow investments of China in certain sectors via the automatic route through joint ventures where we can get technology transfer, where we do not have scale, where we do not have expertise, and where those imports, those investments can actually help us to increase our manufacturing and export footprint. On the other, there are groups within the government and ministries which believe that national security and tensions with China are a clear issue, and that's why investments from there need to be scrutinized, and we need to check dumping of Chinese goods as well. So this debate within the government continues, but yes, there is thinking about whether the Press Note 3 needs to be reviewed or not.
All right, Parikshit, many thanks for joining us. We will head to a break, but up next, 25% of graduates from IIT Bombay did not secure campus placement this year. That and more when we return. Now, the placement season for students at IIT Bombay, one of India's premier institutes, has concluded. Nearly 2,000 students found a job via campus placements, but 25% of the students could not find a job, and the lowest salary on offer has in fact dropped to 4 lakh rupees per annum. Dhananjay is standing by with the placement report card from IIT Bombay. Dhananjay.
The campus placements for the year 23-24 batch at the IIT Bombay has wrapped up. 75% managed to get placed on campus, while 15% of graduates found jobs independently. According to a report published by the IIT Bombay, more than 2,400 students registered for the placement drive, but under just 2,000 students participated in the placements. Out of those, 1,475 managed to secure campus placements this year. The average salary on offer increased by nearly 8% from just under 22 lakh rupees per annum last year to 23.5 lakh rupees this year. The lowest salary on offer was 4 lakh rupees per annum. This has dropped by more than 33% from 6 lakh per annum. Last year, the pay package for 22 students surpassed 1 crore per annum. 550 students got offers more than 20 lakh per annum. 230 students received offers ranging from 16 lakh to 20 lakh per annum. 775 students were placed at multinational companies in India. 662 graduates were placed in Indian companies, and 78 students bagged international offers. A total of 388 companies participated in the campus placements, which is an increase of 12% compared to 324 companies that took part in the campus placements last year. We have a detailed report on our website, CNBC TV18.com, on the nature of these jobs, along with a deep dive into the companies that are taking part in the campus placements.
Dhananjay, many thanks for joining us. That is the latest from IIT Bombay's placement season. Here's the latest in the developments on Byju's insolvency matter. The NCLT has rejected the plea of the startup's US lenders to stay the meetings of the Committee of Creditors. Now, the tribunal noted that the Supreme Court had approved the constitution of the COC. The Bengaluru bench of the NCLT was hearing a plea from Glass Trust and other lenders challenging the exclusion of the US lenders from the COC. Now, Reliance Industries has been chosen as the sole successful bidder to set up advanced chemistry cell manufacturing facilities of 10 gigawatt-hour capacity under the battery PLI scheme. The Ministry of Heavy Industries received bids from 7 bidders under the global tender with maximum budgetary outlay of 3,600 crore rupees. The government said this initiative is another step towards enhancing domestic manufacturing capacity, reducing import dependence and positioning India as a global leader in battery manufacturing. Air India has broken ground for its new maintenance and repair overhaul facility in Bengaluru. The airline has planned to invest over 1,400 crore rupees to set up the first phase of the facility. Air India CEO Campbell Wilson said the facility will make the airline self-reliant when it comes to fleet maintenance when the first phase is complete in 2025. Campbell Wilson also highlighted that Air India and Vistara's merger is in the final stage of moving assets and crew. Now, days after CNBC TV18 reported that the government was working on the third phase of its flagship electric vehicle scheme, that's the FAME, Union Minister H.D. Kumaraswamy has hinted at a likely timeline. Speaking at an event today, he said the future of FAME 3 scheme will be clear in the next 2 months.
FAME 3, several suggestions are coming. Because in FAME 1, FAME 2, what are all the lacuna is there? For that, how to actually separate it, that lacuna. For that, we are working out. Even PMO also in his presence, he is advising several issues. He has given some suggestion. For that, our ministry is working out. I think within 1 month or 2 months, it will be clear.
Well, that is H.D. Kumaraswamy there on the FAME scheme rollout. With that, it is time for us to wrap up this edition of Business 360. The news will continue here on CNBC TV18. Stay tuned. We will be back in a moment with more.